Yo, good morning, everyone, and welcome to the Morning Market Report. Got some crazy candles going on here above my head, man. This thing dropped out of nowhere. I just watched Alex O get absolutely pummeled by this candle right here. This candle went against him, and then his exchange, BitTunix, did some scammy candle stuff there. So I was just watching that. Oh my goodness. Piper makes me sound smart when I'm surrounded by people who have no idea. Life story right there, average crypto Joe. It's okay. Looking at this candle, guys, we are seeing a big doji right now on this. We have fallen back into the platinum pocket here. That's the 887 to the 786 there. We're back in this range. And look, consolidating. What Bitcoin does best. There we go. Consolidating. Looking at the crypto bubbles today, guys. Quite a bit of red on the hourly. Daily still looking somewhat green. You can see Bitcoin still up slightly on the day. We're going to take a look at the stock market. We're going to talk about some job numbers. Jobless claims the amount of unemployed are greater than the amount of jobs available after that 911,000 last weekend. Data's been aggregated, it's been analyzed, and that's the assessment. We have more unemployed, more jobless than we have jobs. So also going to take a look at the next 30 days, guys. Are we heading for a sell-off over the next 30 days? Historical data says that when we have the scenario setup we have right now, the likely outcome is as such. And so we'll break all that down and look at that. We're going to get it all going right here today on the Piper Academy Morning Market Report. You guys know what time it is. Take your seat. Class is in session. Let's get it. Good morning, everyone, and welcome to the Morning Market Report. Appreciate you guys all joining us here. Today's episode, as always, brought to you by Chart Prime, proud sponsor of the Piper Academy Network. So let's go ahead and bring up the greatest asset that I've gotten from Chart Prime. That would be my co-host, the OC guy who's talking to his wife. Not even beautiful hair, wife there, drinking coffee. You got coffee today, OC?
No, not really. But I was getting talked to, so I don't know. I was just a little distracted. No coffee today. Just a little bit of water. But yeah, doing pretty good. By the way, is the thing that you put the flavor stuff in here, and it has no flavor, only odor, and it's pretty good. It's pretty good.
Nice. Most flavor is smell, by the way, just so you know. Just saying. Try cutting off your sense of smell and see how well you can taste. It doesn't work very well. Actually, interesting fact. You guys know I was in the restaurant nightclub business before I joined the military, long before I got into crypto and YouTube and all that good stuff. Visuals. According to studies in Food and Beverage Magazine, 70% of how food tastes has to do with how it looks. So, interesting fact there. Interesting fact. More useless trivia with Army Piper. OC, how you feeling about the markets today, man? What are you seeing on the charts? What's your thoughts on this? Are we getting this scare off, sell off in preparation for the FOMC tomorrow, or what do you think's going on here?
Well, let's take a look at the charts. We're just flat outright, right? I mean, this is just going to the right. We did have a reversal for chart prime, and it is basically, well, yeah, reversing. Yeah, I mean, somewhat reversing, and we're getting to hit a support block, right? I mean, this has been ongoing for a little while. So far as I would say pullback, I'm not 100% sure. I mean, we've been seeing a couple of other reactions before, or more violent reactions for other kind of numbers. So I would say that they're actually holding, and this is very bullish, to be honest, because actually flagging out to the right, when we have this kind of pole right here, well, that is creating somewhat a bullish flag. So we'll see how that goes, because I mean, at the end of it all, well, the numbers that we're expecting are not that good, isn't it?
No, we're expecting a 25 basis point rate cut. So I mean that's good. It's better than a 50 basis point rate cut. So we'll take it.
No, sorry, I was thinking yes, job numbers deprivation, but that just already it's gone. So
That
yeah,
was
I
last
mean,
week,
rate
homie.
cuts,
Last week.
so I mean, rate cuts that are just fantastic for the markets. I mean, so pullbacks right now, well, not really. I think that's why the markets might be just going sideways, which is the bullish structure that we're seeing. But yeah, I mean, I think well, better than we might be expecting. So actually, the today's thumbnail says it all, isn't it?
It does pretty much. It says 30 day bloodbath before a pump. We'll have to see. I think it's more of a meltdown. Meltdown is what I think we'll see. Uh, kind of what you're seeing on the chart right there. Reversal, little console ranging to the downside, So that's what I'm thinking there. Let's go jump over to the chat. Let's go jump over to the chat. Give a shout out to everybody in here. We don't have a whole lot in here right now with us, but that's okay. JR is in here. Rashad, Alexandra G, the mod queen, has joined us. Crypto Coin Mindset. What's up, Keith? How you doing, man? HRJ Trading. Alex Moto. Crypto Billy. Guys, don't forget to tune in tonight to Crypto Billy. Billy Go Tells. Tonight at, I think it's 7 or 8 p.m. Eastern Standard Time. 7 my time, I believe. I'm sure Alexandra G is going to drop that here in a moment. Why? Because she's the best in the biz at this. So shout out to Billy. Appreciate you being here, man. Harp, shout out to you. Who else we got in here? A lot of Rashad. Rashad, hi family. Rashad, how you doing, man? It's always good to see you. I think that's it. Oh, Little Fish. We got Little Fish in here. DDT. Darren does things. He's doing things over there in the UK. And then Average Crypto Joe, Dylan VA also dropping in here with us. And I think that's pretty much it. Not a whole lot in here today, guys. Drop a shout out in the chat. Appreciate you all being here with us. OC, let's go talk about that chart. You gave a little synopsis overshoot there, overlay, but let's talk about the Bitcoin chart. And then there's the Billy Goat Tells tonight, X Space tonight. It's time to learn how to use love to build wealth. There you go. Come find out. Set a reminder. There's the link right there. So OC, let's go take a look at the Darren is always doing things. Let's look at the Bitcoin chart. Let's come back to break down this macro metrics that we're looking at here, and then we'll talk about a couple of reports that came out from Apollo this week. See what that's telling us too. And then I'll break down why I think we might see a 30-day meltdown before our next pump rally. Baba Yaz and Michela, hi from Denmark. Bang, bang. There you go. We'll give you a boom shakalaka to go with that bang. There you go. OC, what do you got on that chart for us, man? Give it to us.
Absolutely. So let's take a look at where we left out yesterday. Basically, looking for the 114 area, somewhere around this zone in here. Let's actually bring it up. This is where we were looking at. So a pullback down to the dynamic reactor as we're breaking out. We did have, if we bring up our charts, we did have a reversal. The reversal, remember the reversals, there are three different things, ways of reversing. When we have this reversal, we have the sharp reversal, we have the breakout retest reversal, and we have the Wyckoff reversal, right? I believe that at this moment, as we're seeing, we are flying out to the right. So this is a breakout retest reversal. Still looking for this area overall right here, somewhere around 114. In this case, right now, rounded. And that is because dynamic reactor has been flooding out a little bit since we saw it yesterday. And just looking for that possible entry. Right down here, we are a little bit bearish. We are losing strength on that bearishness, and that's why we're seeing, instead of going low, since we're losing strength in it, well, then the bearishness starts going slightly sideways. So that's why we have that 45 or less than 45, like 20-30 degree angle coming back down, right? Which creates this flag. So this is encouraging because first we have the reversal retest going on. We have a flag out to the right, and we have dynamic reactor coming in strong. Not only that, if we take a look at the money flow, it's been going stable, not really dropping below the zero line in here. And then we just need, again, the curl back up. Another important thing is that we have seen that flip of the ribbon. And yes, it's true that we have our first rejection, but our volume matrix is still stable to the right. So let's just take a look at it. For example, somewhere around here, when we have that kind of like the same area and we flag out to the right, or when we move flat to the right on our volume matrix. And let me do this really quickly. And here's what we got: a little bit of a pullback and then a movement to the upside. So what we have in here, a little bit of a pullback, and then hopefully we have that movement to the right side. So rate cuts are pretty interesting because they are coming. They're coming because, well, the overall markets or the overall economy is not that great, but that impacts positively in the market of risk, like for example crypto, right? So let's compare that. Let me bring up another chart of Bitcoin really quickly. Let's compare that. Here we go, to this area of support that we have had on our chart for a long time. Not only that, we have another trend line in here that we haven't lost. And let me just prolong that for a little bit and adjust it to make sure that we have that segment 3 point support, right? So we're still within the same area. Again, some sweep of the lows might be what consolidates the Bitcoin trade, and then off we go. So once again, somewhere around 114, 113 area would be the way to start looking for that reversal, as we have right here. I would say maybe not a big performance, but looking for that U shape and maybe crossover as reversal diamond right there. So yeah, that's what I'm looking on Bitcoin. Still looking pretty good. And well, we just need to wait for it to shines an entry point.
Did you? Someone said that you sound like you had a good celebration evening, Mister Raspy. Did you have fun last night at your Independence Day celebration down there in Mexico, man?
Being a little bit off by me telling you a good story.
See, what had happened was that's how we start those stories in the military. Right? See, what had happened was, and then everything just goes downhill from there. Let's go ahead and jump over into the news and let's knock this out. Talk about these metrics over here that we're seeing on Into the Cryptoverse today, guys. Currently sitting at the crypto market cap, a value of $3.996 trillion. That is not the chart that you can see there. Let me fix that for you. There we go. And perfect. There we go. Good job. Good job there, Ecam. Looking at that, $3.996 trillion. The trend on this running about $4.362 trillion. Undervaluation right now, sitting negative 8.55%. Let's take a look at the current risk levels on Bitcoin, sitting at 54.7% risk band. This has to do with the Piper Plan DCA strategy, guys. We drop this on Monday morning every week on Bitcoin and multiple altcoins, telling you the amounts or the multipliers of what you feel comfortable investing. 2x this week on Bitcoin for our weekly DCA. Of course, Ethereum was at a 30% take profits, and I did do that. So, looking at Bitcoin dominance right now, guys, sitting at 57.43%, staying pretty much stable in that area. Without stable coins in that mix, take those out, we're at 61.73% still on the Bitcoin dominance. Looking at that dashboard right there, guys, we got some data that came in off of this, by the way. You guys know we hit the 75 on the historic alt season index here. 75 meant that we were in alt season this weekend, and now we've pulled back to 73.3. It's currently neither Bitcoin nor altcoin season. Number of the top 50 tokens, not including stable coins, that are doing better than Bitcoin for the past 90 days, better return on investment, is sitting at 33. Less than Bitcoin is sitting at 16. We are seeing that start to pull back out of that. But that metric that I wanted to bring up, it has to do with the bull market peak indicators. Guys, this thing's been at zero forever. We now have 1 of 30 have indicated that the top may be in, okay? It's only 1 of 30. Keep that in mind. I do think we're going to see a little pullback, but then get another rally. That's my thoughts process on it. But yeah, look here, alt season index. Check mark. We now have that triggering and shutting out 1 of those 30. There's 29 left to go there. So that is the alt season index right now. Currently not alt season. So we just got 5 Piper Academy memberships gifted by Alexander G. You're awesome, lady. HRJ Trading getting that membership. Marcio Alves, Lunchable Connoisseur. Melissa, hey, Melissa, welcome back. And Chris, all picking up that membership. Make sure you guys go and get into our Discord so you can get access to the Piper plan and get that weekly drop of how we are approaching our DCA bags. So, welcome to the alumni. We appreciate you. Here we go.
Yeah, that's my alumni. You know what I mean?
Moving on here, guys. Looking at the liquidations for the past 24 hours. In the past 24 hours, 98,732 traders will liquidate. Total liquidations coming in at $211.17 million. Largest single liquidation. It was on ETH. It was a swap for USDT on OKX. Cool, 2.26 million, I should say. Not as bad as what we've seen on there before. So look at the fear and greed index on Bitcoin right now, sitting in neutral at 52. How about Ethereum? It's in neutral at 54. This is as of 3 hours ago. Fed fun facts. We're going to talk about this in a minute. This has to do with why I think we could see a little bit of a sell-off. Let's go check out the stock market, though. Right now, the NASDAQ pretty much flat, slightly in the green at 0.03%. S&P and the Dow Jones both in the negative. Russell 2K is down about 0.5%. And the volatility index starting to pick up as we head into FOMC tomorrow. European markets overnight were all in the red. Asia markets were mostly in the green except for HSI. Checking out the bond market, unchanged. It's flat on the 10-year treasury yield at 4.034%. How about oil? All that energy moving to the upside, guys. 0.88% on oil today. The Brent up about 0.6%. Natural gas up 1.5% as we head into the early stages, late stages of summer, early stages of fall. Not good to see natural gas already coming up. Could give us a little indicator of what the winter is going to look like, if you will. And then look at gold sitting at $3,733, sitting at a new all-time high, up 0.4%. Silver is at $43.26 and continuing to take some market gain there on the precious metal side. Copper, of course, and platinum and palladium all selling off a little bit as people are grabbing the more non-industrial metals and running. So, crypto bubbles, let's talk about that on the daily, mostly green. Looking at the hourly, mostly red. Seeing some sell-off in the past hour across the market. Bitcoin up about 0.4% today on the daily, but giving back a little bit of that on the hourly here. Ethereum up, down 1.5%. BNB 0.8% to the upside. Solana 0.7%. Dogecoin down 1.1%. Had a question about Doge ETF that we're going to talk about today also. Don't let me forget. Hyperliquid up 1.1%. Native token to the Hyperliquid decentralized exchange. And of course, the more they make in fees, the more they buy of Hyperliquid. And so there you go. Moving on up on that. Not any real big movers today, kind of flat. Monero's up 6.1%. But overall, in the top 20, everything's pretty much just chill today with a slight downside sell-off, just like we're seeing on Bitcoin now. Looking at this, we already talked about it, but guys, we still have 29 other indicators for the top side. Peak indicators here, only one of them firing off so far, and that would be the alt season index. I do want to pull up the Pi cycle indicator and show you guys what's going on with that, because we are pushing on a bottom level. Had to see what was underneath my foot, make sure it wasn't the dog. She left her sock here for me. She said, here's my sock, enjoy. Let's take a look here at what we're seeing on this. Let me refresh it. There we go. Retail sales, this came out this morning, guys. Got some good data off of it. It was previously here on a revision, of course. It was at 0.5. They bumped it up to 0.6. Consensus was that it would be 0.2. Forecast to be 0.4. Came in at 0.6. So retail sales showing a little bit of strength right now. You can see, though, if we go down to the control group, guys, this control group is what the Fed Reserve puts out there. That is hey, we're going to put this out, and what this data comes in this way, then we know that this is a more accurate data. What is this? It excludes food services, auto dealers, building materials, and gas stations. Okay. It's known as the retail sales control group. It's a key input for GDP. There you go. When we take a look at this and remove those items they were talking about, gas, food, the things that we spend money on every day, right? Retail sales control group month over month was expected to be down slightly, actually came in positive. So seeing some real strength there. Also, of course, those other items that we have to spend money on that they removed from there, given a little bit of a different read there, came in pretty much neutral on retail sales overall, but removed those items and it was a little bit better actually. So what else do we have here? By the way, I do want to point something out. Okay. Breaking this down, I know this looks like, oh, wow, we sold more. Not necessarily so. This isn't per unit. This isn't retail sales of units. It is retail sales valuation. So if we have a situation where items are more expensive, but people bought less of them, you can still get higher retail sales. My dog's over here saying, hey, to me. What's up, Gypsy? How you doing? So yeah, you can still see retail sales give you higher numbers, even though you sold less. So keep that in mind. That could be inflation driven there. What are we going to get tomorrow, guys? FOMC and that Fed speech tomorrow from Jerome Powell, all happening tomorrow, 1 p.m. my time, 2 p.m. and 2:30 on the East Coast. Fed watch here. What are we looking like? I'm going to refresh this and see after that data come in this morning. Yep, 96.1% chance of a 25 basis point rate cut is what we're seeing now. Only a 3.9% chance of 50 basis points, which is good. I do think that 50 basis points would have been a big major red flag that would have scared a lot of Wall Street. So yeah, 25 basis points is what we're looking at tomorrow. And then let's talk about this. This is consumer spending, and this is a breakdown inside of that world. We'll go ahead and bring OC up here with us, and we'll bring this on the screen so that we can both see it. OC, let me move you over there. You look like you're way off the screen, sir. There we go. Welcome back, OC. No, it was my camera angle on you. So check this out, guys. Daily data for U.S. consumer spending. This is our retail sales and what we're spending our money on. Daily data for consumer spending growth is slowing down. We can see growth slowing. There's normalization. We're coming to the downside now. Consumer spending categories by tariff impact. Actually, no, this is not the one I want. I want this. Essentials and discretionary. Total, pretty stable. Spending relative to the past 90 days has not really changed all that much. Look at gas stations, though. Rising momentum, okay? We're spending more for fuel right now. Food and beverage stores, general merchandise, and healthcare and personal care is falling. Discretionary air transportation and water transportation. Going on cruises? Guilty as charged. Rising momentum on those. Food services, drinking places, accommodations, and non-store, no growth really. It's stable, but no growth. And then motor vehicle and parts dealers, furniture and home furnishings, clothing and clothing accessories, miscellaneous stores, electronics and appliance stores, and sporting goods and bookstores all falling. So that's where people are cutting out. And you notice these are a lot of non-essentials, and these are people with money that have the money to go on vacation. So the annual change showing pretty big here. It's dropping here again in building materials all the way down. All this stuff on the right here is a downside move, and then everything to the left increase, which is, let's look again, general merchandise, cleaning products, things like that, right? Non-store retailers, general merchandise stores, gasoline stations, food services, miscellaneous store retailers, and then U.S. total consumer spending slightly higher too. So, but again, this is how much they're spending, not how many units are being bought. So I just wanted to bring that up and break it down for you here. Was there anything else in here I wanted to go over? Discretionary categories? Nope. I don't think so. I think that was pretty much it. But I just wanted to show that, just because we're seeing better numbers does not equate to stronger economy. It just could mean that we're spending more money for less items as a whole. So not impacted by tariffs. Cruises, look at that. There we go. And that was a guy with a PhD, a very smart man to put all that together. So we appreciate him. Thank you very much. I think we'll talk about this. Yeah, we'll go ahead and talk about this, and then we'll get into the charts. There are now more unemployed people than job openings. This is according to the latest data that just came in. You can see the blue line here. That is going to be the number of unemployed people, and we can see that we got job openings continuing to drop ever since April here of 2022 has been on a decline, sending us lower. So what happens when all these people realize that they're not going to get a job because there's no more job openings? I think you'll see even more tightening of the belt on the spending. That's why I was kind of shocked that retail spending was up today, because who's spending that money? That's what I want to know. And then I thought about it. I was like, wait a minute. It doesn't mean that necessarily people are buying more. It just means people are spending more. And so that's the front on that. So let's go talk about job numbers, OC. How's the market down there? Because we live in our echo chambers, right? Whatever we start to look at, if I say I want to see something on Doge ETF, guess what? I'm going to get everything on freaking crypto ETFs and Doge out there, right? So I like to get perspective outside. What's the job market looking like down in Mexico right now?
Oh boy, there's an increase of jobs, but also there's a huge increase on register or out not paying taxes jobs, like informal economy. But also, I mean, since we have like macro things being built, like the Mayan train, like refineries, like stuff like that they don't really work. And if you ask me, well, then they have been creating a couple of other, I mean, more jobs. So, um, the data right now is a little scrambled. I would say it actually not trustworthy, right? But so far it seems like numbers are good here, that the jobs have increased. We have a slight decrease on jobs, nothing too crazy, nothing to really worry about on paper. And well, we have a quote unquote strong economy. And
Oh,
that
we've
is
heard that.
actually
We've heard
being
that in the U.S.
reflected.
We have a strong economy. I've heard that somewhere.
Yes, absolutely. And I mean, you can see that reflected. I'm looking for that. With there is the US dollar versus Mexican peso chart. If you just check out really quick, if you do a glimpse out of the chart right here, you'll see how the price is going back, right? That is a strong peso against the dollar. So this means because now you need just, or you will need 17 pesos to get $1, where before you needed almost
It,
19
it was about
pesos
almost
to get
20.
$8. Yeah, exactly. It was, I mean, if we go here, we actually we were very, very up there. So far here is like this very top 21. You can see that. So so far on paper, we're doing great, right? But I mean, I would say that this is an outlier of what's going on, because as you mentioned, and when you bring up the consumer, right, data, that doesn't really mean that we are, Mexico's 2 to 3% unemployment rate, quite low. Yeah, internal exactly standards, but that is because we are pushing. I mean, look at the debt. We have historical debt right now. So where is that all money coming? It's not coming from its own economy. It's actually
We're gonna
coming
jump.
from
We're gonna jump across the border to Mexico and go down there because you guys have jobs available. So we're just gonna
taker
all move
jobs.
to Mexico. We're just all gonna come down to Mexico and take some jobs. You don't mind, do you? Who's with me, guys? Put a one in the chat if you're
Now we're
ready
gonna
to bum rush the border into Mexico.
build that wall. Build that wall. No.
Oh, good
Oh
lord,
man.
that's funny. I love
Uh,
it. Let's go talk about some other stuff, guys. Before we get into the charts, we were talking about the 30-day sell off and why is this a thing, right? Actually, let's start off with good old Gareth Salloway talking yesterday. This is a pretty good video. Let me bring it up here. Let me get it over here. There we go. And we got the volume. Let's get it. Let's get it in. Let's go. Here we go.
JR
Can't tell you where
says,
it's going to be
I'm
in 10,
gonna
15 years from now. But after a correction that I do think we are close to, and I will go on record and say I do think Bitcoin's going back to at least $75,000 a coin, probably by early 2026. But I do think at some point it goes a lot higher, and then we'll just have to see how the whole world ending type scenario comes into play with it. But I do think that, again, society is craving an alternative to fiat currencies. and Bitcoin is that answer for now, along with gold, and people are willing to accept it. And as long as people accept it and can access it freely, then that still has a place in the future.
That's a pretty big statement. You see Bitcoin pulling back to $75,000 by 2026?
Yeah, and probably I would say within the first quarter of 2026, even cutting myself even lower here.
You
Yep.
wouldn't see a massive rally on the rate cuts, more liquidity, or then as the market starts to sell off, I guess the correlation has always been there. Is that what you would see happening with Bitcoin?
That's more what I see is the correlation, right? So if we look at 2021, when we had the bear market in the stock market, we obviously saw Bitcoin falling all the way below 20,000. I don't think it's going to fall as much because you have a much more diversified group of holders, including big players like BlackRock. But I do think, you're talking if the stock market corrects 20 or 30%, Bitcoin likely corrects 30 to 50%. From these levels.
I just want to point out, people still saying this, and it kills me. It drives me nuts, man. It triggers me when they like big holders like BlackRock. BlackRock is not holding that much Bitcoin. They're holding 6 Bitcoin total. All the other Bitcoin that they have in their bags is retail. And guess what? Retail will sell if they start to lose money. So again, it's straw man argument, man. It's just not going to hold up. That's not what we have here is BlackRock holding Bitcoin. We have BlackRock facilitating the purchase of Bitcoin for retail. So wasn't Gareth saying 5,000, 7,500 Bitcoin last bear market? Absolutely, he was. Absolutely. But 75K, I will point out, 75K is in the range of, on your daily, some of your major indicators. Let's go take a look at the support that we have sitting there on the daily. 75K, I believe. Nope, it's still not down that low. It's about 100,000 right now on the daily quantum reactor. But we do have some support lines that OC was pulling up that were coming in on that level on the multi-time frame support resistance blocks. Maybe OC can pull that up and we can take a look at what confluence there is down there in that $75,000, $79,000 range. It's not unheard of to think that we could go that low. But there was another thing that I wanted to show here on the bookmarks so we can talk about why I think we could see a 30-day drop here. Let's go down here and take a look at this. There we go. Fed Week fun facts. 2025 will be the third year since 1996 with a rate cut while the S&P was at record highs. Keep that in mind, okay? Since 1980, the Fed has cut rates 20 times with the S&P within 2% of its all-time high. Kind of like right now, guys. If you don't know, we're in that window currently. 100% of the rate cuts since 1980 with the S&P at record highs led to more record highs 12 months later. Not for 12 months, but 12 months later, we were higher. Rate cuts are coming amid the AI revolution, the biggest technological revolution since the 90s. The 1996 rate cut with the S&P at the all-time highs led to a 22% plus rally in 12 months. Wednesday will mark the first Fed rate cut in 30 years, though, with PCE inflation at or above 2.9. So keep that in mind. We do have a caveat here that is a difference in this scenario, right? We have an anomaly here, but check it out. There was a thing. It was another point of topic here that I want to bring up. There it is. JP Morgan, they're saying about the Fed rate cut. When the Fed cuts rates with the S&P within 1% of an all-time high, it results in average of 15% upside over the next 12 months. Furthermore, according to our research, 1 month performance is more spotty, with stocks ending lower 50% of the time. That's why I said for the next 30 days, we very likely could see a sell-off and then set us up for a rally for the rest of the year going into the cycle finale. So history says near-term volatility after the rate cuts will be a long-term buying opportunity. And that is the key point that you guys need to think about today. Because when we look at the charts, and we see these levels here, if we get sell off and say we get a 8 to 10% sell off on the S&P over the next 30 days, you're talking about a 16 to 20% sell off on Bitcoin. Well, where would that put us at in line with where we are currently right now? 16 to 20% would be down at least to the $100,000 or lower range. 16% would be about 95,000. So is that a crazy thought to say that we could go down to that level? Absolutely not. I mean, let's just take a look here and grab this recent history. Let's do a fixed range volume profile. We were consolidating down, so let's do this whole new rally point here. There you go, $96,000 value area low, 81. We'd still be in line of, excuse me, of the value area low to the value area high, the 70% volume area of this entire chart. So, of this entire price action section here. So, I do think that we will see a sell off over the next 30 days, but I think that what, as JP Morgan was saying, a great opportunity comes from doing that. So, if we do see that sell off, like historically, what have we seen? Let's just go from the all time high here and let's talk about, I think that we're going to see 30 to 50% sell off in the bear market, probably closer to 50, but not the full 70 that we get. But let's go down and just see what that would look like. Can we get that in here? There we go. Let's go down and see 30, 40% puts us at 75. Guys, that's not a crazy number. Matter of fact, take a look. And they would put us right at the bottom of this previous wick here. So that being a bear market sell-off, guys, don't underestimate the $75,000 could be our target for the bear market. And then we end up getting a rally later in the year that puts us back even higher than what we are today with the rate cut. So it's not anything crazy to think about. No, I'll just say that. So yeah, I think that was all I had on that I wanted to show. That 30-day sell-off window there historically has been the case. OC, do you have those that data for the higher time frame of support down in that range? What are we looking at for higher time frame support down there? Do we have any support ranges? Let's go check out your chart, bro.
Absolutely. So let's take a look at here. Well, you'll see that most of the things are concentrated up in here because that's where things are being allocated. The lowest that we can see for order blocks on daily, it is around 90, 99, 100. But well, if we talk about retracements, there is a big liquidity to be grabbed in here. In here, right? It doesn't come to a surprise. 75, 76. In fact, this is the market low that I expect to reach. That's why it surprised me a little bit to hear it too from him. So I was like, hey, you know what? I do not coincide with what you said. But also I like the lows that you're pointing out. Let's go even to weekly here really quickly. And we're going to be looking at this big box. Remember, this is not only my first entry big box for retracements, right? Then the next one, and here's where things start getting interesting. It is where we have the highest or the big order block on the weekly, right? Here's where we start seeing that allocation of money a little bit higher. You see that we have our first support box as a soft order block, then a high order block, and then two soft order blocks as we start seeing this area being diluted up in these two zones. That is because, well, we don't see any other blocks right down there other than the money flow POC at 20. And that is because this is from Binance. They're pushing data overall basically for far back in here, which makes that, well, all of this volume, and all of this volume concentration pulls this back down here, right? So we start cutting out maybe the previous cycle. We'll see that the money flow POC, let me bring it up in here.
Yeah, that bad boy is way down there.
Higher.
Way down there.
What is it? Yeah, way down there.
Yeah, it's way down there. If you look on Coinbase, on Blowfin, it puts us right around that range. But if you look on Coinbase, it's down in that 30, 39,000 range almost, I believe. And that's what who was it? So Drew said, show them the 39K, Piper. Yeah, guys, going to 75K, I'll take that way over 39K. Actually, no, I wouldn't. Send it to 39K. We're gonna be picking up a lot of Bitcoin at that point in the Piper plan. So
oh yeah. And the difference is like right here, if you can see bluffing, they're cutting out the previous cycle, right? Because this is when, well, the quote unquote bull cycle started, right? Because if you add the previous cycle in, as you can see, bluffing started measuring either from here or from here, right? Bluffing is missing this whole thing. Not only missing that, it's also missing that. Because if you add, I mean, 1, 2, 3 cycles against one, well, I think we know why is it weighted all the way down there, our money flow POC for the weekly, right? So if we just cut out that part, there we go. Our money flow from this cycle, in this cycle alone, which is great to calculate lows, comes around, there we go, 69 K. Very close to that area that we were talking about, the 75, right? 69 is still within that same ballpark, talking about the weekly. So yeah, I mean, that is a very interesting zone to be looking at. And really quickly, we still have a double divergence at right here at the top, but we're curling up, right? So we only need right here on the weekly, just need a little bit more of that money flow to maybe have that run up. And that indicates that we could even, there we go, get back at 100K for the worst case scenario. But it remains to be seen. So far, do not panic. Don't panic. This is just a weekly that takes a lot of time to play out.
It sure does. Shout out to Dutchy. He said it's paid only. He's talking about the Piper Academy Discord. You have the membership right now, Dutchy. That membership you have here on YouTube is your key to get into our Discord. That's it. It's $5 a month, man. You have a gifted membership, so go in there and get some activity, bro. All right, OC. Looking at something that I wanted to point out, a couple of things on the chart. Jump over to my chart here. Looking at where we are on the profit taking window here. Of course, it ends November 3rd. This is typically where we see the top occur before that. Going back and taking a look, top happened a couple of days before the end of it here. Let's go back and look even further. Top occurred about 45 days prior to the end of the cycle. And then again, back here in the 2013 era, we hit it way early in. But usually the top occurs inside of this profit taking grid, right? Currently, right now, this is ending November 3rd. That's only 49 days, guys, according to this metric. So I just wanted to point that out and show that on the chart. And then, of course, what happens if we do lose the bull market support band and the daily dynamic reactor here? Well, historically, it's been the 52-week simple moving average that we have to watch. Shout out to LBC. That's coming in right now at about 96,000. Once we lose that historically, what has happened? It's become our resistance, and that's been it for a cycle run, or at least for a while, right? So if we lose this level, if we lose 96,000, I would definitely say 75K could be on the table. But again, to go back to what we were just talking about, looking at this, cutting rates within all-time high window, which we are about to do, has led to a short-term sell-off that then had a rally going even higher over the next 12 months. So if we are to see that rate cut happen and we start to get that sell-off, I do think that we could assume looking at further out on the horizon for a rally later on in 2026. So some good data there. Of course, anything is possible. It's all crypto, man. You know how this goes. So the markets are going to do what the markets do, and all we're going to do is continue to look at our wristbands every single week, set up our DCAs on the projects that interest us and our best financial interest, and you guys can take it for what it's worth. Do your thing. OC, let's go ahead and jump over. Let's take a look at gold. It's at an all-time high, and let's take a look at them altcoins, and then we're going to head over and join Crypto Princess. She's doing a live right now with T.I. Joe and Crypto Coin Mindset Keith. So let's run through those real fast, and let's get out of here.
Absolutely. So let's follow up on what we had. Remember that we were looking for this last entry right here. And I was telling you, hey guys, hopefully we don't have that much of a retracement. We were a little bit underwater, but right now we are already in push, right? So remember, it's not about the breakout, it's about your retest. I was expecting this one to be the actual retest, but we had, as the markets are good, bro. We had a much better pullback in here as we were going up on the bearishness, basically just reversing. We have our reversal diamond here increasing in strength. And well, I would say that if we have enough volume rushing in, well, the strength is already there, right? The willingness of the market is already there. The pressure is already there. We just need the volume influx, right? I mean, yeah, quote unquote, we just need the volume influx. I think we might be seeing it, especially with the rate cuts. So we'll see how that goes. Maybe some rotation of capital from, well, the safe haven, which is gold, taking some profits back to risky assets. But I still think that people are going to be pushing in gold very, very strongly. So gold hitting all new time highs. And something interesting, it is, look at the structure that we're having on gold, right? Let me zoom in a little bit in here, where we have the pole, we have the flag out to the right, the breakout retest continuation. That really, really resembles me to Bitcoin, if you ask me. But yeah, that is pretty good. Let's go over some icons in here. We should be already into Pepe. We were talking about Pepe. I was looking for a quarter of an entry as soon as we get some peak performance diamond at the bottom and the flip of the ribbon. We are a little bit early on our normal oscillator. Nonetheless, we should be barely, barely, barely on profits with Pepe. Just be careful because this is not over. We barely touched the soft order block, and most of the things are turning back around. So there is a real chance that we do something like that. All right. So as soon as we start getting approaching to this area, it is recommended to take some profits. All right. Because most likely we're going to have a flat pause of bearish continuation. Still trying to make a buck on that bounce back upwards. Let's go take a look at Ethereum, all right? Because Ethereum, we're looking for that peak performance diamond. We already have it, all right? That peak performance diamond was right against the course, which was all right, like, hey, we don't have a breakout. Should I be jumping in? Well, not really, because you don't have that last confirmation. And also, remember, we were looking for a flip of the ribbon. And do we have that flip of the ribbon? Not really. So that's another strong indication that we should have not yet jumped in for a long question right now. We are on the golden pocket. Should we be taking that as a long? Well, I will let that for you guys to decide. But if you're going for that long, I would be careful with my stop loss because then we have a big area and the platinum pocket. All right. So if you're going to be taking that as a long, make sure you add a very tight stop loss. And that is because you don't want to get trapped if we get to right here, the platinum pocket, because that platinum pocket, it is the strongest zone so far on this chart. All right. And that's where we have most. And let me start turning things on. And I don't know why they're not showing. Oh, yep. Trading view. Allocation of volume. Here it is. And let me also turn this out. In the platinum pocket is exactly where we have our next big support. Not only talking about our predictive ranges, but also look at that slightly above, we have a smart money entry and then a retail entry. So in between those two, we have our platinum pocket. What I'm trying to say to you is wait a second. All right. And if you ask me, I rather wait for the trend line breakout. So let's go ahead. Let's lock that trend line. And now, since we're a little bit far apart here, let's add an alert and hunting that trade on Ethereum. Other that when we were, or other coins that I was looking for, it is CRV. I was looking for that breakout retest back up. We do have our reversal. We do have our peak performance, but we don't have a support zone, a solid support zone hitting. until basically right now, right here. So, and that is because the order block that was right down there, it is basically vanished, right? Which means the institution or the people that had allocation of money right there, they decided to last minute take it out and then set a